There are now numerous digital currencies available, and sometimes it seems as if everyone is investing into them at the same time. In this extremely volatile crypto market, you need to watch out for several crypto mistakes that could cost you. In this video, we will cover some common types of mistakes new investors make and how to avoid them. Also, don't forget to subscribe to our channel if you want more information about crypto or finance news. One common blunder new investors make is to base their investment or trading targets around a single coin. Crypto is a very vast industry with many different coins and tokens, and it's simple to get complacent when it comes to your investment method. It's possible to get carried away and invest in a few coins at a time, without having a long-term investment scheme in place. It's best to have a detailed plan for your investments, and to have options for holding and trading coins for the long term. When a program is set up, it should account for any significant percentage drop or gain and how to properly react to this extreme shift in the market. The best systems are conservative in nature and won't shift too drastically from your base target. There are a few key principles to follow when it comes to building a crypto investment plan, such as understanding that basing your objectives on a single coin may result in losses if that coin goes up and down. You need to have a general investment program in place where you're looking at the long-term trend of the market. This is much more important with cryptocurrencies than with stocks or bonds. You don't want to just buy and hold, but rather identify your long-term and short-term investment goals and then create a plan to meet those objectives. To protect yourself, it is best to diversify your investment scheme. There are many different ways to do this, including trading in a number of different cryptocurrencies, as well as investing in assets such as stocks, bonds, and other commodities. Be sure to factor in any regulatory compliance issues that could affect your investment goal. A common lapse investors make is to rush into a new technology without first understanding the entire framework behind it. For example, many people are under the impression that Bitcoin is just a cryptocurrency, when in fact it is a software implementation of a decentralized peer-to-peer network. Also, many people don't know that Ethereum is not just a decentralized network, but a full-blown blockchain ecosystem with its own cryptocurrency, classic version, as well as other assets. It is also important to know that software implementations of cryptocurrencies are not always reliable and are prone to common system network issues. Be prepared for this, and you should always consult a software wallet provider to make sure you are getting the most up-to-date version of the software. This is very important for those investing in cryptocurrencies for the long term, as it ensures that you are maintaining a safe and secure method for storing your coins. Another common crypto blunder investors make is to rush into a new technology without first understanding the entire framework behind it. They invest their money in new coins that have little to no value or foundation. The reason for this is that the current market is very volatile, and new investors may easily get anxious when an initial investment doesn't result in immediate profit. They pour into investments on coins that have a strong foundation, but the price fails to appreciate it over time. Sometimes the best investment advice about cryptocurrencies is that you must have patience with new technologies. This is because there have been a lot of fraudulent activity where individuals invested in new coins that promised amazing returns in a very short period of time. This is not possible in the real world, and it is a big crypto mistake to make. Overconfidence occurs often in the crypto world. It is very easy to get cocky, especially when you have seen exponential growth in a short amount of time. Be careful with your investments, and take care when speaking with financial advisors. You don't want to invest your retirement funds into cryptocurrencies. As an investor, you should have a long-term investment strategy in place and be very careful with your assets. If you are investing for the long term, then cryptocurrencies may seem like a good choice. But if you are investing for the next few months or next year, then it may be a good idea to hold some stocks or other assets that provide you more security and better growth potential. Those who are just getting into the industry may feel the need to buy a lot of tokens right away. But remember, this is often expensive and could lead to losses if the market goes down. It takes skill and expertise in this scenario, as it could lead to losing a lot of capital. Over time, you will discover that there are many different investment objectives that could help you achieve greater investment gains. If there are any other common mistakes new investors make that you know of, please share in the comments below. As always, thanks for watching. Stay tuned for more of your crypto and finance news.